when it comes to trading, there are two categories of things that we need to take into consideration. There are easy things and hard things. Okay, the easy things, the three pillars of the stool. Okay, it's a very good stool. It can hold even this set of glutes. Okay, it can hold this set of glutes right here. The reason is because these three things will give you a solid foundation for being a profitable trader, and they're not hard. A high win rate strategy. Okay, that's the first thing you need to not get wrecked, is a high win rate strategy. And it can be something as simple as golden pockets with 12-minute divergences. Golden pockets with 12-minute divergences. Like, for example, this right here. Golden pocket with a 12-minute divergence. This is a very high win rate strategy. I would say if you have a 12-minute divergence at a golden pocket, there's a very high chance, probably 90% chance, that you're going to get a move from that trade setup. And trading is simply rolling dice. Flipping a coin, I should say. There's a 50% chance price is going to go up and a 50% chance price is going to go down. If we are looking to be a profitable trader, we want to shift the odds in our favor more than 50-50, because 50-50 is literally a gamble. Although people who trade 50-50 trade setups with good risk management can still be profitable, if we can now have an 8 out of 10 win rate, we know that even if we go on we take 1 loss, 2 loss, maybe even 3 losses in a row, we know the chances are very, very low that we're going to go and take that 4th loss. Okay? And once we have that high win rate strategy, you need to have a very clear plan, because a high win rate strategy doesn't mean much once you enter that trade, okay? Because here's why. Let's say I'm looking to take a short from up here, which I am, right? Let's say I'm looking to take a short from here. And let's say I have no plan. I just say, okay, once we come here, if I see my confirmations, I'm going to enter a short, right? Great. But here's the problem. Now all of a sudden you're in a position and you realize, wait a second, where am I going to take profit? What is my stop loss going to be? And you can be very good at entering trades and still get wrecked because you don't have a plan, okay? You need to have an entry plan and you need to have an exit plan, which includes your TP, okay, your toilet paper, and your SL, okay, your silly leopard. Those two things, your toilet paper and your silly leopard, you need to have already planned out once you are in the position. Okay, and the reason for that is because, let's say, for example, this is a scalp, and let's say we do come up here and we get some kind of a small rejection like this, and then we just pump from here. This could still be a profitable trade for you if you have a plan. And so let's say your plan is, I want to come up here, and after a 0.75% move, let's see, 0.75% would take us right here, okay? You want to say after a 0.75% move, maybe I take, 30% out of the trade. TP 30%, okay? And then after you TP 30%, you say you want to move your stop loss to your entry. So this is part of the plan you have to have before you even enter the trade. You also have to know what position size to use. We'll get into that more later. But let's say, for example, when you enter the trade, my stop loss is going to be, above the resistance right here, a 0.6% stop loss, meaning technically you could use, 50x leverage and put 2% of your account in the trade and be risking about 1%. And you're going to set your final take profit down here at the support. But as soon as you hit that first take profit, you're going to take 30% out of the trade, and then you're going to move your stop loss to your entry right about here, okay? So now what happens is you've guaranteed that you have locked in the trade in profit. Is it going to be the biggest win in the world? No. Is it going to be a win? Yes. That's what's important, because your plan has to include what are you going to do if things go your way? What are you going to do if things don't go your way? If everything went your way, we would come up here, reject, and come back down to our support and hit 100% take profit. But we have to have a plan. What if things don't go our way? What if we just get a small rejection and then keep pumping? Well, the plan is I'm going to take out 30% of the trade here and move my stop loss to the entry, because that will prevent me from losing money, right? And then the next plan could be I'm going to take profit 2 at the next logical place, which would probably be this little high volume node right here, okay, TP2. And now let's say that you take out another 20% of your trade. Now you have 50% still open. And let's say now you set your final take profit down here. Okay, what you've done is you've put yourself in a position, and you plan this out before the trade even happened, where if things go your way perfectly, you're going to make a really juicy profit. If things don't really go your way, you're not going to lose money. Okay, and again, we're not entering the trade unless we have our confirmations. So there's a very low chance, if we have our confirmations, 12-minute divergence at a golden pocket, that we're going to blast right through it, right? Very low chance. We already know there's probably an 8 to 9 out of 10% chance we're going to get some kind of movement here. And because we know that, because we have our strategy, we now put a plan into place so that that strategy can work hand in hand with our plan so that we don't get wrecked. And then the third aspect of this is risk management, right? The stool that is going to hold the biggest set of glutes in the world, uneven butt cheeks, guys, uneven, because that's what we're looking for to enter the trade, right? We want to see the juicy left butt cheek on the left here and the skinny right butt cheek, right? Something like this, a big old left butt cheek and a skinny old right butt cheek. And risk management, guys, super important. If you don't want to get wrecked, you have to use good risk management. And what does that mean? It means basically do everything you can to not lose money. So having a plan is part of risk management, because if you can lock in profit to guarantee the trade to be a small win or a break even, wonderful, wonderful. The reason I am able to be profitable doing this is because my priority is not losing. I don't care about winning trades. The winning trades will come, guys. If you focus on not losing money, the winning trades will come. Certainly. Because eventually you're going to get a trade that comes up to your level and goes straight down without stopping at all. Okay, for example, the short trade that I am in from much, much higher, the setup that was given in the VIP Discord over here. Let's see if I can find it now. Yeah, this one right here, which is up now over 1,000% in profits. My trade from 44.3, give or take. Okay, that trade, as we can see here, as soon as it hit the entry, it just came straight down. It did not retrace. It did not come back to my entry at all. These are the trades that are going to make you the most money. You have to enter every trade as if it's going to be going against your plan. And because you're assuming it's going to go against your plan, you have a plan for taking profits early, stop loss to entry, to prevent losses. But then when you get these trades, okay, it goes according to plan and you make the massive profits. And so what you're doing is you're basically setting yourself up so that your losing trades could even be winning trades. Okay, your losers might even be winners or break-evens or small losses, but your winners are massive. And that is how you're going to do it. So risk management involves having a plan, but also it involves position size. Okay, I do not advocate risking more than 0.5 to 2% to maybe, okay, I should say 0.1/2% to 5% of your account per trade. And this will vary depending on if it's a scalp or a swing trade, but the way you are going to do this, there are many ways. Okay, if you want to know more about risk management, check out the course. There's a 30% discount in the description. We go over risk management and all that stuff. Let's see what's going on right now. The corn, it was unable to come up to that level. It looks like we're going to get a 12-minute trigger wave right here. I don't know what's going to happen, right? I don't know what's going to happen right now. But risk management will make sure that even if you get stopped out of your trade, you still have enough capital to continue doing this. Because here's the thing, we're trading to make money. The only way we can make money is if we have capital in order to enter positions. If we're blowing our capital more than 1 to 5% per trade, if we're risking 10%, 20% of our whole account on one trade, 2 trades, and you're totally out of the game, right? Because if we have, let's say, $100,000 in our trading account, which, by the way, I do find $100,000 in a trading account to be very comfortable to make money that you can actually use in real life without being tempted to over risk, okay? Because the gains are substantial, but you don't have to go crazy. You can wait for those high probability setups and not feel like you're not making gains fast enough, but that's a whole nother story. If we have $100,000 and we're risking 20%, let's say we're risking 25% of our capital per trade. In 2 losses, we've just lost half of our money, right? Now we've come down to $50,000. Now here's the problem. $50,000, right? What happens if we say, okay, I lost 50%, all I have to do is make back 50% and I'm good? What happens if we make 50% on our 50 grand? Are we back to where we started? No, we're only at $75,000. So when you start over risking, you can see that it is an uphill battle to get back. And the more you see those losses stacking up, the more tempted you're going to be to revenge trade. And this is where it gets into the hard things of trading, okay? Because the easy things are easy in theory, but in practicality, they can be difficult because our human psychology and emotions get in the way of trading the way we should, right? If you are using good risk management and making a practice of doing so, you will be absolutely golden if you have these other 2 things in order. Again, these are the 3 pillars of the stool. Let's see if I can find a picture of a 3-legged stool. 3-legged stool, okay? This is what we're looking for right here. This is a 4-legged stool. No, I want a 3-legged stool. Aha. Yes, a 3-legged stool right here. Let's find a good one. Where's a good one? Okay. Yeah, I like this one. Okay. We've got ourselves right here, high win rate strategy. We've got ourselves right here, have a plan, and then we've got ourselves right here, risk management. So easy, 3-legged stool, but here's the problem. Our psychology gets in the way. So here are the hard things. Hard thing number 1 is you have to have patience. If you're getting wrecked and you know these 3 things, you're in a good position. You are in a great position. And most people I talk to have these 3 things down. They're like, Jason, I know what to do. I know to wait, but the problem is I did this and that, and then I liquidated my whole account. Right? I knew I should have waited to long lower, but I thought price was pumping, so I longed, and then price started to dump, so I added more, and then price dumped more, and so I added more because I wanted to have a good entry, and then I had to lower my leverage down and put more margin up front, and the next thing I know, I'm sitting here about to get my whole dang account liquidated, and I should have just focused on the easy things, but the hard things got in the way. So let's go over the hard things that will keep you from getting wrecked if you get things down. Number 1 is patience, guys. Patience. Now, unless you're a scalper, hardcore, and there are in the VIP Discord, you know, people in here are doing the craziest scalps all the time. We have a really good community in here, by the way, of people posting the juiciest technical analysis setups in here. Okay, shout out to K-Pax, shout out to Boyan, shout out to White Phoenix. These guys are TA experts, and a lot of times they will scalp, taking many, many trades a day. Sometimes I do that. Mostly, I like to day trade. If I'm going to take a scalp, it's going to be a very, very high confluence, almost like a day trade kind of, a scalpy day trade, right? And so unless you are at the level where you can really scalp with precision using limit orders and making profit on very small movements, you have to have patience to wait for your high win rate strategy setups to show up on the chart with your plan. One of the biggest things that wrecks people is over trading. Okay, so patience is broken down into 3 things to avoid. Number 1, avoid over trading. You do not always have to be in a trade. People feel like they're going to miss the boat. If you had a plan to short from here and price is dumping from here, unless you already had a plan to short the 12-minute trigger wave, don't take a short. Just wait. And if price comes up to your level and you don't see your confirmations, don't take a short. There will always be another opportunity. Those perfect trade setups will come. They will come. I promise. They will come. And if you have the patience to wait for those perfect setups, think about it, you are actually ahead of the game as opposed to always chasing price, trying to always be in a trade. Because if you're always trying to be in a trade that you haven't planned for, not only could it be a horrible entry, but also because you don't have a plan. Let's say I FOMO short right now. Okay, I FOMO market short. Well, now what? Where's my take profit going to be? I don't know. I haven't thought about it. Where's my stop loss? I don't know. I haven't thought about it. And then price, let's say price does dump here, and I see the unrealized P&L start to go up. I'm like, oh, nice. I'm in some good profits here. And then it starts to retrace. I'm like, oh, man, I should have taken profit. Like, what do? Do I mark it out? Do I try and set limit orders back down lower? And then if we start pumping, now it's like, okay, my limit orders aren't getting hit. I had no plan. Don't overtrade. Wait for those good setups, because when they come, you know you're already setting yourself up with an 8 out of 10 potential to have a win rate. You know you already have a plan of where you're going to take profit, so you don't have to worry about, oh no, what the heck am I doing here? Right? And here's another thing. Sorry, guys. I'm still getting over a little bit of a respiratory infection over here. I've been breathing in some crazy stuff, okay? Another thing you got to think about is, if you are sticking to your plan and you know where you're looking to take trades from, it makes life way less stressful because you can do things like garden, install a dishwasher, hang out with your family, have your alerts set, and when your alert goes off, all you have to do is literally look at your phone and see, do I see my confirmations here? And if yes, enter the trade, stop loss, set your take profits, and forget about it, right? Until you get the notification on your phone that however many contracts was sold at your take profit or your stop loss gets hit, you don't have to worry about it, right? If you avoid overtrading, you are setting yourself up for making way more money. Way more money. Fewer trades, more money. I know it's a hard concept for people to get because you feel like you're not doing anything if you're sitting on the sidelines. But you are doing something. You're doing your analysis. You're coming up with a plan. You're setting yourself up for success. And then the second thing to avoid is not sticking to your plan. If you had a stop loss in place, you need to use that stop loss because it's part of your plan. If you take that loss, it's okay because the loss was already calculated in your risk management plan. If you take a 1% loss, so be it. So be it. If your stop loss gets hit and then all of a sudden price starts to go in your direction anyway, there could be a possibility that you can enter that trade if your plan is still in place, right? You might still have your confirmations at the same level that you were looking to trade, in which case you can enter the trade. But if you don't see your confirmations and price, let's say you were looking to short, price goes up, stopped out, and then starts to drop, people have the tendency to get into a revenge trade right there. And unless you clearly have the reasons of your original plan to enter that revenge trade, you need to just not do that and stick to your plan. Stick to your take profits. Don't get greedy. If you're going to take profit at 0.5%, at 0.75%, at 1%, take that profit out. Don't get greedy and say, you know what, I'm just going to let this position ride a little bit more. And then, after it rides, I'll take profit at a later time. Don't do that because you don't know if price is going to then retrace and all of a sudden you had a winning trade that is now turned into a losing trade, right? You had your plan, you didn't stick to it. What could have been a winning trade or a break-even trade is now a loss. And then avoid trading in a bad mindset. This is something that a lot of people don't take into account when they are trading. And the reason is because they don't consider mindset when they're approaching the charts. If you are in a bad mood, if you are tired, if you are angry, if you are hungry, if you are mentally foggy, I recommend not even trading. If you're at the grocery store, if you are in bed, do not trade. I mean this has been so true in my life. I have to be in the mindset of I am trading. If I say I'm done trading for the day, that means I am not going to be on my computer. And if I'm not on my computer, and let's say I do get an alert on my phone and it's late at night and I've already decided I'm done for the day, you have to be in the mindset of I am trading. I know that doesn't really make sense. You have to have a plan that you're waiting for that time. If you are tired and it's late at night, and you will be more tempted to enter into bad trades. If you are hungry, you'll be more tempted to enter into bad trades. What I recommend everybody do is you have a routine every single day that gets you ready for the trading day. For me, I wake up usually at 5 o'clock in the morning. I pray for half an hour. I do some exercise in the basement while I listen to the dramatized audio King James Bible. And then I go upstairs and I drink water at the kitchen counter and I do technical analysis. That is my morning routine. In that time, I am refreshed spiritually, physically, emotionally. I'm in a good mood. The caffeine is flowing through my veins and I'm excited to be here. I'm excited to look for trades. I'm excited to have a plan. If you are not in that mindset, I recommend not trading because it will be hard to do the easy things when you're not in the right mindset. Now, I know that sounds a little crazy, but it's true. And then the second hard thing is risk management discipline. Okay? Position sizing. Don't risk more than 1 to 5% of your account. It doesn't mean you're only putting 1 to 5% of your account on the trade. There are times where I put 100% of my account on the trade and I'm risking 1%. There are many ways to do this. Either you can use 1x leverage with a 1% stop loss. You could use 50x leverage with 2% of your account on the trade with a 50% stop loss. There are so many ways to risk 1%. If you want to know more about that, check out the risk management section of the course, 30% discount in the description. But you need to be risking that 1 to 5%. If you get lazy, you are going to get wrecked. Okay, avoid being greedy. Don't say, because this is such a good setup, I'm going to risk 50%. Okay, I'm not going to sit here and say I've always stuck to good risk management principles. There have been times where I have gambled on a trade or even accidentally just rushing into a trade, put too many contracts on it, right? But in general, you need to be in the habit of good risk management. You should already know if you have to FOMO into a trade, and I mean smart FOMO, where you're FOMOing in because your plan is happening and you have to get in quick. You should already know how many contracts are going on that trade. You should already know what leverage you're planning to use because it's part of having a plan, right? When you have a plan, you know what leverage you're going to use. Okay, if I'm using 70x leverage, I know how many contracts equals 1% of my account. If I'm using 50x leverage, I already know what number of contracts equals 1%, or if I'm risking 2% or 3%, I already know how many contracts go on the trade. Okay? You need to avoid greed. Yes, there's a potential for you to make massive amounts of money. If you are being greedy and you're not using a good position size, but the thing is, you will get wrecked, which leads me to my next point. Winning streaks can be very, very, very dangerous because a lot of traders come in and they have these 3 things down very well, right? High win rate strategy. They have a plan, but they know how to use good risk management. But what happens is they're trading and they're on fire, man. They are on such a winning streak, you know. They longed the bottom, they shorted the top. They longed the bottom, they shorted the top. They longed the bottom, and they're like, you know what? I'm making these slow, steady gains here. If I just increase my position size, if I just double it, I could make some more gains. And they double it. And now they're really making money and they feel like such a boss, right? They're like, man, this is so easy. I've got this down. They increase even more. And then they see this trade set up and they've been waiting for it. And they're like, this is the mother of all trade setups. And they have forgotten about risk management because they're on a winning streak. They're getting lazy with the risk management, and everything that they worked so hard for over the past week, 2 weeks, month, gone in a single trade. Or a huge chunk taken out in a single trade. Or maybe that winning streak has led them to now not stick to their plan. Because now they see, I didn't use good risk management and I'm in this really bad position. Let me add to the position so that I can have a better entry. Let me add to the position again. Uh-oh. Let me lower my leverage so I don't get liquidated here. Right? And now, it's that cycle of, okay, I did the wrong thing, so now I'm going to do more wrong things to try and correct that first wrong thing. And it's this cycle of you're trying to do more and more wrong things to stop that first wrong thing, right? It's like the old lady who swallowed a fly, okay? The old lady who swallowed a fly. Do you guys know that story? How do you spell swallow? Yes, the old lady who swallowed a fly. All right? This is a very sad story, okay, about a lady who swallowed a fly. Okay, she did something bad, right? She swallowed a fly. She didn't want to swallow it. She swallowed it anyway because she wasn't using good risk management. Okay, there it is, the fly in her mouth. And so, in order to get rid of the fly, she swallows a spider. So she said, you know, spider will get the fly. Okay, she swallowed the spider. Now the spider's crawling around in her stomach. She's like, uh-oh, now what? I got a spider and a fly. She swallows a cat. The cat will get the spider, right? Now the cat's alive in her stomach. She keeps swallowing more and more and more animals till finally she swallows a horse and it kills her. It's exactly what we go through when we are trading like this, right? It's exactly what we go through when we are in a bad position and we're trying to fix it with more bad decisions. Winning streaks can be dangerous. Stick to your good risk management. Slow and steady wins the race. Slow and steady wins the race. Yesterday, I took 3 trades, one for Ethereum, 2 for Bitcoin. None of those trades were perfectly according to how I wished. They were both trades that hit take profit 1 and got stopped out. I closed the day in profit. Great, that's a win for me. I have more money today in my account than I did yesterday. Great. Slow and steady. If I only ever took, you know, if 9 out of 10 trades were small little wins and then 1 out of 10 were massive wins, you have to be happy with that. The truth is, those good trades are going to come, guys. They are going to come. They might not come today. They will come eventually. Slow and steady. And then number 3, this kind of goes hand in hand with all this other, but stick to the plan, guys. Stick to the dang plan. If you have a plan to enter a trade, it's very simple. Trade or no trade. Deal or no deal. Right? What was that from? Deal or no deal? What is that? I don't know. It's in my head because of popular culture. Deal or no deal. What is this? What is this? I don't even know. Deal or no deal? I don't know. What is that? Is this a reality show? One of these things? I don't know. Look at this guy. He looks like he wants to make a deal with you. He definitely, yeah, oh yeah, look at this guy. He's trying to make a good deal. He's trying to make a good deal, right? When you have a plan, you come to the chart, very simple, trade or no trade. Right now for me, am I going to enter a trade here? No. Why? Because there's no trade for me to enter. I'm not at a level. The last long I entered was from right down here on this purple wick because we had a very clear resistance, flipped as support. We got some bullish divs on the low time frames. I entered a little long right here. And guys, you know, it was a very nice long, in fact, because I used very high leverage. It was a very clear invalidation point, and I hit some take profits and got stopped out of my entry for a very small win. But for right now, I don't really see any trades for me to take right here. So I'm not going to trade. It's so simple. It's so simple. What a relief it is to know I don't have to take a trade right now. It's not going to negate my progress. It's not going to make me lose money. And what a relief it is to know that I have multiple plans in case price pumps or if it dumps. I have multiple plans to get into multiple trades. And I know that those trades are going to be a high probability of being winners because I have a good strategy. It's such a relief. Whew. A lot of people get too stressed doing this. Don't get stressed because you don't know whether or not to enter a trade. It's okay to be stressed because you've been on the chart all day, doing analysis all day, waiting for your setup all day. But this should not be a stressful thing. It should be a relaxed, fun thing. All right. So that's it, guys, on how to not get wrecked. I hope you found this useful. Okay. I feel like this covers a multitude of sins